Welcome to World Insight, coming to you live from Beijing on CCTV News. I'm your host, Tian Wei. On today's program, last August, China took a step to reform its exchange rate system, allowing for market forces to play a greater role in the RMB's daily value. 1 year on, how much has changed? And Asia now has the fastest growing number of billionaires in the world compared to all other regions in the world, including Europe and America. What makes it such a breeding ground for wealth? And we begin today's show with China's exchange rate reform. It has been a year since the People's Bank of China carried out the reform, extensively marketizing the exchange rate of the yuan against the dollar. The PBOC now maintains the stability of the yuan against a basket of currencies set by the International Monetary Fund, fixing the yuan's daily trading midpoint according to the currency's closing rates on previous day. So what is the result of all that? Let's take a look at this.
On August 11, 2015, China's central bank announced it would begin fixing the renminbi's daily trading midpoint by basing it on the closing price at a number of banks at the end of the previous day's trading. The decision caused weeks of international consternation because it resulted in a depreciation of the renminbi to a more realistic value. It also had the effect, however, of increasingly internationalizing the Chinese currency, a move that was furthered in December when its exchange rate system started to track the value of the yuan against a basket of currencies rather than just the US dollar.
Before the reform, the RMB was overvalued if you look at the economic fundamentals. So what was needed was an appropriate way to devalue in an orderly manner. Last July, the International Monetary Fund approved the renminbi's joining its SDR. But they said they believe the exchange rates and the midpoint marketized enough.
And sure enough, last November, just 3 months after the PBOC's exchange rate reform, the IMF announced that it will accept the yuan into its special drawing rights basket, a major milestone in establishing the yuan's position as a global currency. In addition to that success, Gu Sairong of Societe Generale believes the reform has also helped banks and companies to better understand how exchange rates can be used to hedge their currency risks.
From the market point of view, traders, our clients, companies, and banking peers now have a better understanding and knowledge about the trends of the RMB's fluctuation. In terms of risk control and market judgment, financial institutions and companies are more confident with yuan as an international currency as well as a currency hedging tool.
Renminbi will officially join the SDR basket on October 1st with a weighting of 10.92%, higher than either the Japanese yen or the British pound. Gu says the central bank's next step in internationalizing the yuan be making it easier for foreign investors to enter the Chinese market. The PBOC announced earlier this year it will be canceling the quota limitation system for foreign institutional investors in China's interbank bond market, though the quotas have not been dropped as of now.
And for more on China's exchange rate reform, 1 year on, here in Beijing, we're having Mr. Xu Sitao, who is the chief economist from Deloitte China. Welcome, sir. Also joining us from Washington, D.C. in the United States, we are having Mr. Nicholas Lardy, Anthony Sullivan Senior Fellow at the Peterson Institute for International Economics. Welcome as well. Mr. Lardy, what do you make, in retrospect, the changes of the exchange rate 1 year ago? About 2%. What do you make of it now?
Well, I think it's a very important step forward. I think there's a great deal of progress has been made over the last year. China now has a more flexible exchange rate, and they've announced new policies for determining that exchange rate that take it away from being tied so closely to the dollar, which was a big disadvantage for China, and move to manage it primarily with reference to a basket of currencies. So I think we have more flexibility, more market influence, and more transparency. So I think on all three criteria, this reform has been a big success.
Of course, that was 1 year ago. It was being termed by some as exchange rate reform, by others as devaluation of the RMB. What do you make of it, Mr. Xu, now 1 year later at that moment?
A year ago, I think China did the right thing. Now, in hindsight, it should have been done earlier, and the magnitude should have been greater. But having said that, I fully agree with Professor Lardy. I think we have seen a lot more transparency, we have seen a lot more fluctuation, and firms and individuals actually are becoming a lot more relaxed about the exchange rate fluctuation. This is exactly the aim of the reform.
But remember that, I mean, 1 year ago, there was quite a stir in the market.
Right.
In fact, the people reacted to it anxiously. Remember, they were talking about as a result of this devaluation, maybe there would be a problem with geopolitics in the region. And they're also talking about you're going to have a dominating cheaper Chinese exports to the rest of the world. What are you going to do with this? So now, 1 year later, have any of these two become real concerns?
Well, first of all, when people say devaluation, we talk about 1.8% decline against US dollar. For most major currencies, this is less than the daily trading range. Secondly, let's look at the fact. In past 1 year, many emerging market currencies, Asian currencies, they have remained quite stable. So actually the market is a lot more prepared than what consensus had dictated. I think people expect this. This is okay.
All right, let's take a look at some of the numbers. Probably it could help us to understand more because we're really talking about real economists here. Statistic has been showing that Chinese exports still falling since that, well, about 2% exchange rate change. China's total exports by value fell by 6.25% to more than 180 billion US dollars in June, down from over 192 billion US dollars in the same month last year. So that's a comparison between this year and last year. Exports in the first 6 months are also down 2.1% year on year. This raises the question, of course, whether the devaluation a year earlier necessarily led to more Chinese exports all over the world, or rather the exports are being dominated by other factors. Mr. Lardy.
Well, I think when you analyze what's been happening on the trade front, you have to take into account changes in prices. And we've been in a deflationary period, particularly for major commodities. And so when you look at the growth of China's trade in real terms, as opposed to measuring it in dollars, it has been quite successful. China's share of global trade is still going up fairly strongly. If you measure things in nominal terms, China's trade declined last year, but global trade declined much more. And when you put it in real terms, China's trade is growing several times faster than global trade. So I don't think this move on the currency was in any way motivated by what's happening on the export side. China's share of global trade's been going up ever since 2001, and I think that continues now. China also has a still significant trade surplus. So I don't think the currency move last August was in any way motivated by what was happening in the external sector. I think it was motivated by some of the factors we talked about earlier,
right,
and particularly the IMF's suggestion that the exchange rate should be more market determined. Remember, the IMF had laid that out as one of the criteria that they would use when they decided whether or not to include the RMB in the SDR basket.
Right.
So China made the move in August, and that was one of the factors that pushed the executive board to include the RMB in the SDR basket when they finally voted in November of 2015.
Yes, indeed. I think there are two issues here, Mr. Xu. One is whether the earlier suspicion that China was using the exchange rate change to boost its export is really true or not, as Mr. Lardy already argued. The other thing is there has been a global slowing down of trade anyway, and China's proportion in this global trade, what has been the current status, does that have anything to do with the RMB exchange rate change? Of course, Mr. Lardy already put out his opinions. What about yours?
Well, my opinion is, first of all, if we look at trade surplus, I think that's correct we look at that. Roughly each month, we have about 40 to 50 billion US dollars trade surplus. So that's actually suggesting RMB was not overvalued to begin with. But on the other hand, if we look at, just real estate, stock market, RMB denominated assets, clearly there's a strong need for Chinese companies and for Chinese individuals to diversify the investment. That's going to drive the exchange rate lower. In fact, imagine if China adjusts the exchange rate in 2008, 2009, not doing this 4 trillion RMB stimulus package, today we'll be in a much, much better situation.
Having said that, though, what do you make of the next step? Because we are already approaching October the 1st, which is the day when the RMB being included in the special drawing rights basket. So what would that mean in terms of China's preparedness from now until then, Mr. Xu?
I think there are a few ways to look at that. First of all, once RMB officially being included in the basket from October 1st, China would be subject to fewer constraints in determining exchange rate. So whether we want to adjust the exchange rate higher or lower, we can have more flexibility, that's for sure. Secondly, assuming China would continue to reform the mechanism, for example, allowing foreign investors to buy Chinese bond and to set interest rate more based on market forces, and that would internationalize RMB. So either way, I think the fluctuation will be greater than before October 1st.
All right. Mr. Lardy, your view?
Well, I think there's maybe some misperception of what will happen on the exact date that the RMB is included in the SDR. There are some central banks that will want to add RMB assets to their reserve holdings, but the number of countries that tie their reserve composition to the composition of the SDR is relatively small, and the Chinese RMB weight in the basket is not very large. So I don't think in the short run it's going to cause a big increase in the demand for RMB denominated assets. Over time, I think it could become an important force, but I think in the early days it'll be more moderate, more modest than some people are anticipating.
And as a result, Mr. Lardy, what would that mean for the pace of China's RMB exchange rate reform? As we all know, that is one of the most important barometers in determining whether China has been doing its financial reforms, which is very important task facing China right now. People are complaining about the speed, whether it's sufficient or not. What do you think? With that joining the SDR basket, will the reform be sped up? Will people have less concerns about so-called dangers?
Well, I don't think the inclusion of the RMB in the SDR basket is going to cause any big discontinuities in people's perceptions or in the markets. I think it will be a pretty seamless transition.
All right, and Mr. Xu?
I think your question is very good because we cannot look at exchange rate in isolation. If we allow greater fluctuation of exchange rate, that is good. At the same time, if we unveil genuine supply side reform, actually you could see capital inflow, which would put the exchange rate higher. Yeah.
So it's very interesting a situation. There are a lot of ifs. What if it happened, and therefore it leads to certain kinds of results. But having said that, let's ask you, both of you, an important question, which is about politics. We are seeing, of course, the G20 summit, which China considers as a big deal. And then there's going to be the US presidential election. And next year, there's going to be the 19th Party Congress in China. All of these events are extremely important for China-U.S. politics. And we all know China and the U.S. economies are becoming pillars of the world's economy, whether they necessarily admit it or not. But Mr. Xu, what would this mean for China's speed of reform of the RMB exchange rate, for the real RMB exchange rate going to be so-called according to the market fluctuation?
Again, there are many combinations and permutations. But from political calendar perspective, of course, with political calendar, there will be stronger emphasis on economic growth rate. Now, stronger emphasis
growth rate and also stability.
Yes. So stronger emphasis on economic growth rate probably would result in continued increase in terms of debt and leverage. So that would result in certain stress in financial system in the long run. So from exchange rate perspective, that would have downward pressure on the exchange rate in the short term.
Mr. Lardy, do you agree with that? Are those political events important?
Yeah, I think I do agree, and I would underline, I think we're entering a period of extreme uncertainty in terms of the overall economic relationship between China and the United States. There's a great deal of uncertainty about what will happen to U.S. trade policy, in particular, regulations on investment and other things that could change. And there's a chance for significant discontinuity on the U.S. side. Of course, I can't judge what the prospects for discontinuity on the Chinese side are. I would think they would be less. But as Mr. Xu said, a lot depends on the pace of reform in China. If the supply side reforms move ahead, there could be significant additional inflows into China that would tend to cause the RMB to appreciate on a trade-weighted basis. On the other hand, if there's too much buildup of debt and a perception of increasing financial risks domestically, then there might be more pressure for capital outflows, which would tend to cause the RMB to depreciate. So I think it's very difficult to forecast what will happen to the exchange rate of the RMB going forward.
That's right. And the other thing, of course, is the capital flight. We've been talking about this for a long time, but this is such an important economic phenomenon these days for China. Of course, we've seen over the past few months, RMB exchange rate begins to appreciate a bit. And that would mean already less capital flight out of China, and yet people do not know the speed. So what would that mean from now to October if we are looking at the special drawing rights basket, and even further when we're looking at these political calendars, Mr. Xu?
I think capital flight is a too sensational notion. Right now, China has about 3.2 trillion US dollar foreign reserves. In 2005, China was very anxious to depack the RMB from the US dollar because the concern were we got too much foreign reserves, and too much then were about 700 billion US dollars, roughly 25% of today's level. So I think capital flight, this is too sensational. I don't think people are moving money out of China at any cost. I mean, that's not the case. I think this is just people are enlarging, reevaluating their investment universe, and firms are buying foreign assets. I don't think this is a capital flight.
All right. Mr. Lardy, is this a blind capital flight, or this is very calculated, a good investment that we are talking about? The Chinese are making good of their wealth to invest overseas. What would happen with the RMB exchange rate reform, October the 1st, all the political calendars? Mr. Lardy.
Well, I agree. What we've seen over the last year, it should not really be characterized as capital flight. It's Chinese corporates paying down their foreign currency debt. Remember, when the RMB was steadily appreciating back in 12 and 13, and interest rates abroad were very low compared to China, a lot of Chinese corporates borrowed money in foreign currency. Indeed, foreign currency debt doubled. Then in the last year and a half, people's expectations changed. They thought, well, maybe the RMB isn't going to continue to appreciate indefinitely. Eventually, foreign interest rates will start to rise. So their expectations changed, so they began to pay down their pay down their foreign currency debt. They paid down the foreign currency debt that they held offshore, and they paid down their foreign currency debt that they had taken out from Chinese domestic banks. It was the same phenomena, but I don't think that's really characterized as capital flight, this kind of blind capital flight.
Right.
And I think it was a rational reaction to changed expectations.
I see. Before we go, we only got 10 seconds for each of you. What would you say, in one sentence or two, likely to be the prospect, as we have witnessed already 1 year on with the reform of the RMB exchange rate regime? Mr. Xu.
I think people are becoming more relaxed.
Great. Mr. Lardy, are you as relaxed as Mr. Xu?
I think, yeah, I agree, and I think markets vastly overreacted a year ago. They've become more rational. I think we're getting more comfortable with increased flexibility of the exchange rate, which is, I think, a welcome development.
All right. More relaxed, more reasonable, I guess. Thank you so much, Nicholas Lardy and Xu Sitao. Really appreciate, gentlemen, for being with us. Thank you. Stay with us here on World Insight. We got our final segment coming right up. Asia is outpacing every other region in the world in its growth of billionaires and wealth, surpassing Europe as the world's. What makes it the best place for big bucks? We're going to ask those questions. You're watching World Insight, and welcome back. Next, we turn to some of the world's richest people. Asia is leading the world in the growth of billionaires. Some experts believe that in the next 5 to 10 years, the number of Asian billionaires will surpass Europe because of the high growth opportunities in this part of the world.
Asia is running fast into the World Billionaire Club. WealthX, a financial consultation company, has released a report about the richest people in the world. It finds that Asia is leading all other regions in terms of growth rates for both billionaire population and wealth. The number of billionaires in the region has grown to 645, with a world-leading growth rate of over 15%. Their total wealth put together is over $1.68 trillion US, and it's increasing at a rate of nearly 20% faster than the other ultra-rich in any other region in the wealth accumulation. Asia's future growth as a billionaire hub is mostly attributed to China. In the first quarter of 2015, there was a new billionaire created almost every week in the country. Many believe it is especially significant given that China's economic growth is slowing down. Although Asia is rapidly catching up with the West in the number and wealth of billionaires, their channels of creating wealth are rather different. Most Asian billionaires gather their fortune from consumer and real estate sectors, while their US counterparts make their harvests in financial and high-tech industries. Asia's billionaires are also unique compared to their US and European counterparts. They are younger, and a significant number of them grew up in poverty. Forbes tells us that the average age of the Asian billionaire is 57, 10 years younger than its Western counterparts, and 25% of them grew up in poverty, compared to the US and Europe with only 8 and 6% respectively. So far, there are 2,473 billionaires in the world, one for every 2.95 million people on the planet. So while the number of the world's super rich is rocketing, so is the gap between the rich and poor widening in many regions of the world.
For more on the latest trend of global billionaires report, we are now joined in our Beijing studio Liu Baocheng, professor and also dean of the Center for International Business Ethics at the University of International Business and Economics. Welcome, sir, to our program. Meanwhile, joining us from Nottingham in the UK, we're having Ms. Sarah Hall, professor of economic geography in the University of Nottingham. Welcome as well, Professor Hall. Let me begin with you, Professor Liu, here in Beijing. How should we understand this? The huge number of billionaires, especially the increase of the number here in Asia.
Well, before we understand, let's celebrate.
Oh, really? Okay. Well, if you want to, we can do that.
Yeah, because it is really our Chinese people that are really popping up the number. And number one, I think, is that Asia, for the last decade, has continued to serve the engine of the global economic growth. And so the macro environment provides the fertile soil to grow our billionaires. And in the second place, I think the level of entrepreneurship within Asia, nourished by the cultural tradition, is also a very strong reason. And third is really the deregulation. Continued marketization of the economy gave them ample opportunity. So finally, I think the growing consumer demand that are pushing for e-commerce and real estate, etc. So, they are living in the right time.
Right. Professor Liu is already celebrating in a big way here in Beijing, but Professor Hall, what do you make of this phenomenon? Is every factor that Professor Liu just mentioned celebratable? Or rather, there are also some concerns?
I think it raises interesting questions about the changing nature of the global economy. I totally agree with what the other guest said in terms of why this is happening. But I think it's also important to note that part of the shift towards Asia might also be attributable to the economic woes in Europe and North America in particular. And obviously sitting in Nottingham, that's rather less celebratory. I think also it's important to note that the industry that supports these very wealthy individuals, the wealth management industry, is increasingly aware of the need to service people in Asia, the very rich. So we're seeing growing numbers of private banks, etc., opening in China, Singapore, etc.
That's right. But Professor Liu, where does the money come from for these people? How could you suddenly see a huge wave of billionaires just pop up like mushrooms all over Asia? It is not just in the emerging economies, it's also in developing economies as well. So how should we understand this?
Well, once you hit on the jackpot with the money, and money creates money. So, of course, entrepreneurship in the first place, particularly for the Asian billionaires, they grow, most of them grow from the rags into riches and self-made, billionaires. So, they are smart in the first place, and they are really, are able to grab opportunity. And the other is really innovation. So the real estate aside,
why real estate aside? I mean, it creates a lot of billionaires, right?
That's
and
true.
that's where one of the problem is.
Real estate is the conventional way to grow billionaire, but rather, e-commerce, the WeChat, these type of IT-driven, innovation are there to pop up more of the younger generation to move ahead. I think that can really be more attractive to more of the younger generation to follow suit.
All right. In order to understand what exactly is the makeup of these billionaires, we need to take a look at some of the numbers. Perhaps the biggest shift over the past 2 decades has been the rise of self-made billionaires, as argued by the two guests of our program, especially in the United States and emerging economies. Take a look at the self-made wealth, accounted for 45% of billionaire wealth in the year 1996, but that figure has increased to nearly 70% for the year 2014. Another source shows that 56% of the billionaires were self-made last year, compared with 13% of heirs. 31% had a combination of both. So there seems to be a new phenomenon of self-made billionaires. And I guess that's probably even more true in emerging economies, because the last generation was really poor, in fact, comparatively speaking. But next, is it going to be sustainable? And the traditional way of making one rich, mainly you work on the commodities, and you work on exports, you work on property development. Are these still going to be the fronts in which most of the billionaires come from? Are some of those, so-called new industry the only makeup of the overall group, Professor Liu?
Well, I think the card shuffles more frequently and more quickly among the list of billionaires. And if you look at the past 5 years, many of those listed either died or, they are completely eradicated from that list. One way is because the poor management. The other, of course, some of the financial difficulties in that. But I think in China, it might be a different story. Number one is that China still offers more ample opportunities, and in the meantime, Chinese financial market can really create, billionaires, almost in a very short period of time. And now China is also on the verge of transformation. So with more of hopefully the merger and acquisition, leveraging the state-owned firms, that might be a new group of people that can really get listed on the billionaire list.
Let me deconstruct, Professor Liu, some of the things you have just said to Professor Hall. Professor Hall, one of the things that people have been at the very beginning celebrating and now seem to be concerned about is the financialized economy that we're having these days, meaning the returns of capital have much exceeded the growth pace of the real economy. And that, some say, has been the problem contributing to the financial crisis that we witnessed from the year 2008 and probably even continues now. So, Professor Hall, should we really celebrate this long list of billionaires, or should we put more efforts into reform the overall system and this phenomenon? Professor Hall.
I think if we take that longer view, I think you're exactly right to sound a note of caution. And the one thing we do know about the very wealthy is that they're very good at reproducing themselves. So even if one mechanism for increasing wealth dries up, they're very good at finding new opportunities, and certainly investing in real estate and internet-related companies and consumer markets in China is one of those. But I do think it raises very real questions about issues of inequality within the global financial economy. I think briefly after the financial crisis of 2007-8, we thought maybe finance wouldn't run away in quite the way it has, and yet what we're seeing is a growth of billionaires and growing income inequality globally.
In fact, many of the measures taken since the financial crisis have not seen much result in what you have just said, Professor Hall, a decrease of gap, but rather still an increase of the wealth gap, Professor Liu.
Yeah, absolutely. Right now, 1% of the population takes, almost the equal amount of the wealth versus the rest of the population. So the wealth concentration is really exacerbating very quickly. So because the money machine, because the financial market, because of the leverage of so many derivatives that are there to pop up this one. So with the billionaires, topping the Europe and America, but we have not seen Bill Gates or Warren Buffett in Asia that are all standing to perform their social responsibility. So the fact that Warren Buffett dropped in the ranking because he tied up much of the money with the Gates Foundation. So now I really would like to see that in the next couple of years we can really see leaders in the philanthropy. So that they can really contribute to what they really get the money from.
If I could, Professor, yes, well, if they volunteer to work for philanthropic causes, that's wonderful, but you cannot expect a society to be fairer by only expecting others to volunteer to do something. You have to fix the system itself to make it fairer. So that comes the question. With Asia being the breeding ground of billionaires, that should be celebrated because there should be more wealth as a result. But on the other hand, it could also be a cause of growing concern because of the ever-growing wealth gap. Professor Liu, are you seeing economies in this region, in fact, have been quickly adjusting their own situations and systems in order to avoid the latter going even further?
Not exactly, because the equal opportunity is pretty much still a political slogan. So and also with the first buck of money, and you can easily make more bucks of money.
Right.
And right now we also see a danger that the economy is hallowing because people would rather play more of the money game than to put the money into the real manufacturing industry and to improve on the innovation. So this is something that, the government with the private sector will really have to work together to find a strategic path for a more sustainable solution.
Professor Hall, here is the question. That is, how can we make sure, under the current circumstances, that things can be changed so that the gap can be narrowed in a way? Because it seems that the more money the very top have, the so-called billionaires, and some of the others have, the fewer opportunities there will be for the others either to invest or to move their social ladders up. Professor Hall, what do you make of it? What do you think should be this killer policy that economies should adopt at this moment?
I think the crucial issue here is the way in which the financial services sector has become increasingly separated from what gets termed the real economy. And so I think trying to get finance to work better for the nuts and bolts of the economy is going to be absolutely crucial here. So seeing more investment in key sectors that drive up, offers the opportunity of driving up employment opportunities, for example, as well as providing finance for regional development initiatives. So I think really trying to overcome the divide that seems to be emerging between finance, which is increasingly being populated by the very wealthy, and getting that financial services sector to work for the rest of the economy rather than to almost float separately like a money game, as your other guest has called it.
We see two things, Professor Liu. One is with more and more billionaires in the market, we're going to see more dominating of the economy by some individuals.
That's right.
That's one thing. The other thing is we are going to see more taking advantage of the current system, for example, tax havens around the world, to create more wealth for certain small groups of individuals. And of course, these billionaires have been contributing to the economy on their own, working very hard, and also contributing to the employment opportunities around the world, creating wealth, maybe participating in philanthropy. Don't get us wrong, they have nothing to apologize about. But the thing is, how can we make a fairer system? I think that is the issue, once again. Professor.
I think, number one, much more enhanced global cooperation in leveraging the opportunity, not only in terms of the, the business opportunity, but also to obstruct the whole for tax haven, etc. And second place, to encourage really fair competition through the anti-monopoly law. And third is really to enhance the tax scheme so that the underprivileged or disadvantaged population can have a fair chance. And third is really to encourage the the voluntary philanthropy from these super rich people, so that they can really awaken their conscience, so and also that can also mitigate the social conflict that may possibly arise because of the polarization of the wealth.
Well, there's already the old money. These billionaires, they already got a lot of cash on hand. On the other hand, there are also those coming into the new tech areas, those self-made and those billionaires who have also put their money into the new areas. And here comes the issue, as Professor Liu just said, the anti-monopoly problem that we're going to see, because the legislation cannot catch up with the speed of the real development of the new industries. So, Professor Hall, in this regard, what do you think are some of the most important steps that should be outlined in policies in the near future?
Yeah, I think this is a very good question, because it points to one of the key differences between the very wealthy in Asia and China compared to Europe and North America. The billionaires in China and Asia tend to be younger, and the money is based much more around these new forms of wealth in tech startups, etc. So setting up regulations surrounding the growth of that sector is going to be critical. And here I think you see that some of the issues facing China and Asia in terms of its management of the very wealthy might be slightly different to those that we see elsewhere in the world, where managing family and inherited wealth becomes very important. So I think the regulators need to be aware of the key sectors that are driving this growth, particularly here I'm thinking about the tech startups, where China's providing a significant number of global billionaires, and trying to intervene in that sector to think about how that might be able to be used to address inequality.
Tech startups in China, elsewhere in the world, are all very active. We'll see whether policies can really catch up with the realities. But for now, thank you so much for helping us to understand more about the global wealth and how the system should be adjusted in order to make growth fairer. Thank you so much, Sarah Hall, Liu Baocheng. We appreciate it. That is all the time we have for today. If you'd like to see more of our program, visit our website. Just type in World Insight CCTV News into your search engine. You'll be able to find us, or you can also check out our YouTube channel. From me, Tian Wei, and everyone on the World Insight team, thanks for watching, and tune in again tomorrow for more insights from across China and around the world. Good night.